let's say, would I say the early 60s or early 40s. I wouldn't know how long, right? Nobody actually knew that you could popcorn and make it into popcorn, right? Nobody actually knew you could popcorn and make it into popcorn. But that invention actually came, and we started eating popcorn. And then because we started eating popcorn, what happened to the demand for corn? It rose, right? The demand for corn actually spiked up, and then it has gone far beyond that. Now you use corn for a whole lot of things. You use them for uh, um, 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 bio chips and all of that, right? You use them in your phones, your smartphones, and a lot of other things. You use corn to create plastic like substance, right? So there is a whole lot of improvement around most of these agro commodities, which keeps pushing the demand for these agro commodities up. That's why over time they tend to appreciate, right? So it is easy, it's one of those instruments you could easily just predict, right? Because already you have, though you might not be a farmer, but at least everyone has that little knowledge of how the planting and the harvest season works, right? You know that once there is good planting season, it might most likely lead to a bountiful harvest. And when you have a poor planting season, it most likely will lead to poor harvest, right? So it's just that there is just a very, very direct correlation. And because of that, it is easier to predict agro commodity movement, right? So unlike other instruments where you have a whole lot of political influence on, right? The only political influence you get on agro commodity is when there's going to be subsidy, right? There's going to be subsidy or government loans to farmers. Those are some of the policies that might actually affect agro commodity in the long run. In a situation where the government comes and say, okay, all you farmers, I'm actually going to be giving you a certain amount just to boost your planting quota this year, right? Because of that, right, you might get excess planting that year, and that would also lead to a bountiful harvest. And once you get bountiful harvest like that, of course the price of that commodity should drop, because of course scarcity dims, it brings about hike in price. So in a situation where price harvest is poor, let's take for example, farmers couldn't afford to get the required fertilizers, the required seedlings to plant during that planting season. What will be happening is the few ones that were able to go through the planting season that year would be the ones dominating the market, and they could tag the price at whatever amount they tend or they wish to. Without any competition, you just naturally see that price will skyrocket. So scarcity brings about increase in price. So it's definitely, and because of the ever growing demand of this particular set of instruments, because of the ever growing demand of this particular set of instruments, you still see price rising. So because the amount of production or the amount of harvest that farmers get year in year out sometimes is not even enough to cater for the world need. And don't forget, they don't just when it comes to harvest, they don't just use up everything. Some goes into reserve, like, you understand, some goes into reserve, some go into research, some goes into biotech and the likes, right? So because of this, there is ever growing need for these agro commodities, and that would also keep making price to appreciate. So you can see that it's actually very easy to predict, right? So what kills people when it comes to trading on agro commodities, determining a very, very good risk to reward ratio, right? So if you're not calculating yourself well, if you're not using a very good a very good lot size in proportion to what you have in your account, and that's where it might spell trouble for you, because agro commodities are very, very expensive to trade on. And if you're not doing the right thing, of course, in as much as it can give you a lot, it can also cost you a lot. So you just need to be smart about the whole thing, right? You just need to be smart about the whole thing when you're trading agro commodity. So what are the seasons? So fundamentals on agro commodities can be can be affected by the seasons at which they come out, right? They can be affected by the seasons at which they come out. So some the seasons they come out. So if it is the season for corn, of course you should expect you should expect lower prices on corn around that time, right? You should expect lower prices on corn around that time. Then inflation, right? What does it, when you say inflation, a lot of persons still haven't wrapped their head around the concept of inflation. We've heard that there's been a lot of inflation in the US as at now, and it's spreading to other economies. You understand? So the UK is also suffering inflation. You get inflation in the likes of Australia, the Australian dollar, and all of that. So there's literally inflation all around the world. And what does inflation simply mean? Inflation is the hike in hike in prices of consumable goods, mostly, right? Hiking prices of consumable goods, right? In small dose, inflation can be a good thing, but when inflation is so much in an economy, it's not really a good thing. So if naturally before we used to get let's say a bucket of tomato for like 15 naira, and now I'm getting it for like 300% increase of what I used to get before. You can see that such this thing is not really good for the economy. And in a situation where companies are supposed to be trooping into that economy to invest, but because of the high rate of inflation, you most likely will see these companies or these foreign investors actually pull out, because cost of getting things or cost of getting raw materials would be so expensive, and they wouldn't be able to do so well in that economy, and they would go to an economy that has a lesser inflation, right? A lesser inflation, so that they'll be able to make proper production and make cost. Everybody wants to maximize their profit, right? Everybody wants to maximize their profit. That's why you see most companies go down to China for cheaper production and cheaper labor and all of that, right? So in a situation where a country has high inflation, you most likely will not be seeing new investors coming to the economy, right? Because of that inflation, and that affects prices, right? So all, of course, agro commodity being an agricultural produce are badly affected by the weather, right? Yeah. So when you have a perfect weather condition, you definitely have good you definitely have good production rates, right? Once the weather condition is high, you have good it's perfect. Once the weather condition is perfect, let's say for example you're a local farmer now and you're planting yam, right? Most times you get farmers pray, I pray there shouldn't be so much rain. It depends on the type of crop he or she is planting, right? So some persons will pray for a lot of rain, some persons will pray for little rain, right? So it depends on what type of crop. If your crop needs so much water, of course you'll be praying for more rain to fall so that your crops will do well. And of course, if your crop doesn't need so much water, you'll be praying for less rain to fall so your crop is also able to do well and it's not flooded away, right? So that's just it. So the weather condition affects to a large extent the level of pricing on agro commodities. So you also have improved seedlings, right? So over time, there have been a lot of seeds that have been genetically enhanced, right? So they enhance some seed. Before you could actually tell that if I'm to plant a grain of corn, I most likely will be getting, let's say, 2, 3 cobs of corn by the time it is fully matured for harvest. But now with a lot of genetically enhanced seedlings, right, you could get double of what you're supposed to get on one seedling, right? So if I'm planting an enhanced seed in the ground and a non-enhanced seed, the one that is not enhanced might most likely will be giving me maybe 2, 3 cobs, right, on that stem, right? While the one that is genetically enhanced might be giving me roughly around 6, 7, or in some case scenario 10, right? So that's like double the output of what that's yeah, double the output of what you should have gotten naturally. So of course that should influence price also, right? Because when that happens, you get bountiful harvest, and bountiful harvest brings prices of agro commodities down, because there's a whole lot of competition in the market at that point in time, because there's availability of that goods. Right. So have you ever wondered why okay, let's use precious stones for example. Have you ever wondered why some precious stones are more expensive than the other, right? It's because of the scarcity. It's easier to get gold than it is easier for you to get diamond, right? And it's easier for you to get diamond than it is easier for you to get sapphire or emerald, right? So that's the thing. So scarcity brings about value. When you're a scarce person, naturally your friends will respect you. I believe you get the gist. So that's just the thing, right? So this is the profitability index for most of these agro commodities. This is the profitability index for most of these agro commodities. I know a lot of persons have seen this chart before, but let me just bring it back to your consciousness so that you know what you're missing out by not trading agro commodities. So you're looking at a profitability index of wheat, for example. So if I'm trading 0.01, I simply will be making 1,600 naira per pip movement. When you say per pip movement, it simply means price just moved one pip, right? I believe most of us here are traders, people that have been trading this market before, and you know what a pip movement is. A pip movement is the smallest move of price. So price move from point A to point B just in a milliseconds. You're already making 1,600 naira, right? It's 1,600. Let's say it's 1,700 naira, right, per pip movement on wheat, right? So what if I'm using of course, if I'm using 0.02, I'll be making double of that. That'll be roughly about 3,000 plus, right? Just for a pip movement. So imagine I'm targeting 10 pip, right, on 0.01, 10 pip on 0.01. So you could just imagine the possibility. 10 pip on 0.01. So I'll be making 1,600 or 1,700 times 10. That'll be roughly around 17,000 naira. You get? So you get the gist. So that's how much I can be making trading agro commodity. Imagine I'm now trading it on a mini lot, right? The other one was a micro lot. Trading it on a mini lot, right? Per pip value, I'm getting roughly around 16,000 per pip value. That means price move from point A to point B, I'm getting 16,000. And if in the same scenario, I'm targeting 10 pip, right? That's roughly around 160,000 naira. Right, that's roughly 160,000. And let's say, imagine I'm going on a standard lot, right? I'm going on a standard lot. So per pip movement on a standard lot of wheat, I'll be making 166,000. So 166,000, right? If I'm going on a standard lot, that should be making me 1.6 million. 1.60 million, 1.66 million. So that's quite a whole lot. So you could see that's per pip movement. That's per pip movement. So if I'm going 10 pips, I'll be making out roughly about 1.66 million naira. So that's quite a whole lot. There's no other instrument on the global financial market, be it currencies. Of course, currencies are the least profitable instruments you can find on the financial market. Then you have the index follow next, right? And then, of course, agro commodities top the chart. Agro commodities top the chart. So if you're looking at corn, for example, corn, you'll be making roughly around 2,000 naira per pip movement on 0.01. So imagine I don't even want to go on any lot size above 0.01, and I have good 600k in my trading account. I could comfortably be making this, targeting 10 pip. And don't forget, because you don't have so much volatility on an instrument like corn, wheat, cocoa, and like when I say volatility, you don't see the charts move up and down, up and down. You don't keep seeing constant movement where you could easily get change in market direction, right? Because you could easily get changing in market direction of those other instruments because of the volatility. But when it comes to wheat and this thing, you get a clear-cutted direction. So it moves just sometimes the chart might be still for a while, and then you get this sudden push. Once it pushes, it goes quite a while again, and then you get another push. So that's how agro commodities actually function. So if you're looking at this bunch here, you see that coffee is actually the most expensive, right? Making you as high as 8,300 per pip movement, right? Making you as high as 8,300 per pip movement. So if I'm making do you know what it is to make 8,000? So do you know how much it would take you, or how long it would take you to stay on a chart on Euro USD to make 8,300? Do you know how many pip price will have traveled? Let's take if you're trading on Euro USD, for example, and you're trading on 0.01. Of course, that's $10 per pip movement, right? That's 10 cents rather. 10 cents per pip movement, 10 cents per pip movement. So if I'm calculating 10 cents, convert that to Naira, you see that that's a very, very, very small amount of money. That you're looking at roughly around, if I'm not mistaken, let's say 100 and something Naira, or so 82 Naira or thereabout. So if I'm calculating how many 82 Naira, how many 82 Naira will I get, right, to make up to 8,000 now, which is the same 0.01. So on coffee, you could see that the possibility is endless, but you can't trade such an instrument on 100,000 account, because if I'm trading coffee, for example, and I take 0.01 on coffee, it simply means if price goes in my favor, let's say nine times, right? My account might most likely be closing out. If price goes against me, let's say nine times, just nine times, right? My account would most likely be closing, might most likely be closing, right? So that's just it, right? So let's take for example you're not trading that same coffee with 0.01. Of course, you'll be making roughly around 83,000 naira per pip movement. You know, there again, how many pips do you think it would take for price to travel on Euro USD or USD JPY or the likes of those instruments for you to make 83,000 naira per pip movement? This is when I say per pip movement, that means price just moved the slightest move of price and you're already in 83,000 naira per pip. So I can tell you the possibilities. Okay, so can we all hear me now? Can we all hear me? Can we all, okay, perfect, perfect. I don't know why the audio went off. So okay, so I was saying, uh okay, I don't know where you guys lost me. I don't know where you guys lost me though. But okay, so I was talking about profitability of each of these instruments. Yeah, I was talking about the profitability of each of these instruments. So I was saying, so for coffee, for example, now you're going to be making roughly around 8,000 naira per pip movement on an instrument like zero point 0.0 or 0.01 on coffee would be making you about 8,000 naira, right? So I wonder how many pips it would take you on Euro USD, for example, to make 8,000 naira per pip movement, right? And let's say, for example, you're going in for a mini lot on coffee, that would be making you roughly around 83,000 naira per pip movement. So you should also know that for you to make that kind of amount, price should have traveled quite a lot, right? Price should have traveled quite a lot. So also, I was saying something about trying to ensure that you make or you pick your trades in accordance to what you have in your account, right? You shouldn't have 100,000 naira and go trade on coffee, right? It most likely would make you lose that account. But of course, there are times where you're lucky, and let's say maybe on days of CPI, you get that boost, and then you're able to follow in on the market, and then you get that lucky jump. But as a trader, you're not trading, you're not banking on luck. You're looking at clear-cutted analysis, right? Clear analysis, and also, of course, ensuring you're taking calculated risks. A lot of persons take risks, yes, but are they calculated enough for you to ensure that even if, right, the market is going against you, you could still bounce back, right? You're taking everything, right? So of course it works for some persons, but I can assure you it won't always work if you're trading that strategy. If you're always going in head first, if you're always going in 100% risks, right? It might work for you, or it might work for A, but might not work for everybody, right? So it's always best you use lot size proportional to your account, right? So let's take, for example, you're going on a standard lot that's roughly around 800,000 naira per pip movement, right? So I believe you get the gist of how profitable. So I think the most traded are wheat, corn. You look at the likes of soya beans and then coffee, right? Also, we have sugar also, and then cocoa is not mostly traded because it doesn't have good profit per value. It doesn't have good pip profit per profit per pip value. Right? It doesn't have good profit per pip value. So you have cotton also going at 2,000 naira per pip value on a micro lot size 0.01. So these are how profitable agro commodities can be, right? So of course you could do a screenshot of this to get accurate news on, because for you to trade this instrument, agro commodities can be highly fundamental, and you need to be able to track um what is happening around the agro commodity market. Of course, as a farmer, if you're a farmer or if you have interest in agricultural produce, you wouldn't find it so difficult analyzing agro commodities, right? But of course, you still need to know what is happening in the world generally, right? I tell people that what gives you money in this market is information, and the more information you gather, the most likely you are to keep making profits in this market, right? The more information you gather, the most likely you actually make money in this market. And I keep going back to a particular incident that happened, was it 2-3 years ago, right? So that was around when Australia there was this news that Australia was half of Australia was on fire. Not really that half of Australia was on fire. It was just most of their dry lands where they do farming, where they farm on legumes and then soya beans and like. So because most of those crops are dry crops, and they are easily inflammable, right? Just a little bit of fire and then it keeps spreading, right? So what happened was that there was a lightning strike, and then it started a little bit of a fire, and before anybody could know it, the whole thing got out of control. And then it was up on the news, and then my boss then told me that, you know, that I'm sensing a very good opportunity here. And I'm like, how? Like Australia is practically on fire, and you're sensing opportunity. How cold can it be? And don't forget, regardless of whatever is happening in any economy, be it good or bad, as a trader, you're not really I wouldn't want to say you're not really concerned, because of course those are people's lives and property. But in the long run, you as a trader, you're also looking at making profit from it based on the shift in price, because most of these things affect the pricing. They affect the price, just like Russia and Ukraine. A lot of persons benefited from Russia and Ukraine, but not necessarily because you traded directly with Russia or with Ukraine, or you took sides with Russia or took sides with Ukraine. It's because when the war started, of course, the first thing that happened was hike in price of oil, right? And some persons benefited from the hike in price of oil. Of course, when coronavirus also broke out, a lot of persons benefited from the decline in the price of oil, because around that time, not much persons was using oil. Industries were not running, people were not driving, and all of that. So people, not that you're really happy with the situation of things, but I mean, money has to be made, and there is a clear-cut opportunity for you to make money on the financial market. And what do? You go in with the click of a button, and you place your buy or sell order. In as much as you have good volume in your account, or you have volume in your account, you go and click your buy or sell order and wait for your returns to come in. You close it and you cash out. You understand? So that incident happened, and he told me, you know, prices of corn and some of these other legumes would push up. And of course, I wasn't in doubt. I just went, and I think um I went, I did a little more digging on the news and what happened and everything. And I knew it was going to be a long-term effect. You understand? It was going to be a long-term effect, because they were already past planting season. It was getting close to harvest season, and then the fire broke out. So definitely that would imply that the harvest for that year is actually going to be poor. And Australia also is one of the top producing nations when it comes to legumes, right? When it comes to legumes, so Of course, I knew that output that year would be poor from the part of Australia, and that will affect the global output. That will affect the global output. And once the output is poor, definitely supply that year won't be able to match the ever rising demand for this agro commodity, and that will push up the price of this commodity. And I went, took a buy on the instrument, and I left it. It was a long term buy. And agro commodity being what it is, it didn't move. So once you place a buy, you most likely will be getting something like a very quiet market, then nothing is happening, and you be like, is this thing moving? And that's how agro commodity is. You place your trade, you be like, is it moving? It's not moving now. And then all of a sudden, you just move your eye and come back, you already see a very long candle. And then it wasn't a very, very long candle per se, but agro commodities are not like indices where you get massive long candles, right? It was just a regular long candle that you see, or maybe on a daily basis, maybe you see such a thing happen 2 3 times on indices, right? Maybe you see such a thing happen 2 3 times on the likes of D30, right? But it was for agro commodities, such things doesn't really happen much. So you get price move roughly around 100 pip, which it rarely happens, right? Because agro commodity, at least in a day, the most it might move in a day, you're looking at maybe 50, right? 50, 60 people. Price traveling over 100 people on agro commodity is a huge one. And I was able to key into that by, and I can assure you it made me quite a lot. Right, so that's just the thing. But if you don't have good volume, of course, if you don't have good volume, you might not be able to key into that trade appropriately. You might not be able to key into that trade appropriately. Right. So let's look at projections for what we'll be expecting on agro commodity from especially with the fact that we have CPI. Don't forget CPI also affects, because it's consumer price index. Because it's consumer price index, we'll be looking at the cost of consumable goods, what it costs to get consumable goods in the US, and that also trickles down to the like agro commodities, what it costs to buy grains and all of that. So that should also affect the price of agro commodity. Right. So I mostly use these. You could take a screenshot of this website, right, or you could write it down, note it down somewhere. Let me just give you a few seconds. You could just note it down somewhere. So when you need news on each of these agro commodities, you could just easily refer to them. All right. Okay, so let's go to farmprogress.com. That's where I get most of my all right. So this is farmprogress.com. You could get some literally progress on any crop out there, on any agro commodity. So the most traded, we have corn, coffee, we have wheat, right? Corn, coffee, wheat. Those are the most traded. So already, if you're looking at I was reading through the news. I opened some articles there, and I was just reading through the headlines. So I discovered that there's been drought, right? There's been drought. If you report of there's a report shows drop in planted acres of corn and soya beans, and that's because of drought. So drought is more like dryness. When it comes to, I'm not really an agric student, right? But I had to learn about most of these things because I'm a huge fan of how much I'll be making. And not that I'm a real huge fan of agriculture. I'm a huge fan of how much I'll be making from the business of agriculture. You understand? So I didn't really study agric so much, right? So you pardon me if I make mistakes when it comes to some of these agricultural definitions and all of that. But from my own understanding, I believe drought is when crops you have more of a bad weather affecting your crops, right? So I think, and most of these things, they are signified by the color of the leaves of this plant. You get, naturally you should get green leaves, but when there is drought, you have more of a greenish yellow or sometimes brown. When it goes brown, you know that crop is almost completely gone, right? So you get something like what you're seeing displayed here, right? So, and it's really of course, if you have that in large dose where a lot of farmers are complaining about, especially when you have something like insect attack, you have things like pest attack. Of course, that would affects the overall output of most of this particular instrument of agro commodities, and that would in turn affect the harvest, right? So the correlation here that I want you to actually pick out is when there is good harvest, right? There is good production, and there is good output rather. When there is good planting season, when there is good planting season, it leads to bountiful harvest. Bountiful harvest leads to excess in the market. Excess in the market brings down price, right? Good brings down price. When you have a bad planting season, right, and then you have a bad harvest, what will happen is price would spike up. Let me come again so that you get that correlation. When you have good planting season and you have good harvest, what happens is there is excess in supply in the global market, and then that should bring the price down because there is a lot of competition. There's a lot of competition, and because of the way the lifespan of these particular commodities, right? They are not like stocks where they could just stay forever, right? Farmers needs to sell out in order for them to clear out inventory, because if they don't clear out inventory, it turns out and becomes a waste, right? They need to sell out to clear out inventory. So if if you don't sell out to clear out inventory, you most likely will be making loss as a farmer. So what they do is, if the prices are too high and it's not selling out fast, they drop the prices, and naturally all the prices just keep coming down. Because of what point, if I'm going to the market and I want to buy corn from somebody and the person is telling me it's 100 naira, and I walk down to the next person, but in the bid for the next person to sell out his produce in time, he drops his prices to 70 naira, right? And people keep going to the guy that drops his prices to 70 naira. Meanwhile, the guy that has the goods worth 100 naira is still there. Over time, his goods begins to deteriorate, and he will have no choice than to drop his prices also, which would also drop down the price of the commodity in general. I believe you understand how it plays that. And then people keep dropping their prices until prices go extremely low, right? And that's how it works. So, but in a situation where planting was bad, harvest was also bad. You understand? Harvest was bad, planting was also bad. What happens is you have fewer commodities in circulation. So if I have few commodities in circulation, not a lot of farmers actually did well. So the ones that actually did well and have enough to sell can decide to hike their price. And because there are no options, right? There are no options. If I don't have options to buy elsewhere, if I don't have options to buy, so you get more of monopoly of the market from a few persons that have that goods readily available, and they could target as at any price they want to target at, and naturally it keeps climbing. Naturally, the prices keep climbing because of the scarcity of that particular commodity. So I believe that has synced in. If you still don't understand after this explanation, then I don't know what I can do again, right? I don't know. So you, of course, you're to. So someone is asking, so when prices are down, do you buy? Yes. When prices are down, you sell, right? When prices are down, when prices of course, just like every other chart, once price is dropping, what do? You sell. Once price is climbing, what do? You buy, right? You buy when prices hit a very low point. So once price hits a low point, of course, just like you have the dollar to the naira mark, I'm giving a whole lot of correlation so that you get to understand how it works, right? I'm giving a whole lot of correlation. So when it comes to buying and selling, at what point to buy, at what points to sell, right? Just like you have the dollar to the naira, right? Of course, we you know that the dollar might most likely never climb above 1,000 naira, right? That's more like a benchmark, right? Once prices start going towards 1,000 naira, sometimes there are always policies in play that will just push price of the dollar down a bit, right? So once price start approaching 1,000 naira, there will be policies in place to push price down a bit. And also, once price also starts going down to 400 naira, there will be policies in place to also push it up. So those are more like support and resistance, right, on the naira to the dollar, right? So same thing also plays out on corn. Don't forget, like just like every other commodities out there, just like OPEC has its body, right? Though the ones on agro commodity might not be pronounced, but they are governmental bodies around this that ensures that price doesn't fall below a particular level, and neither does it rise above a particular level, right? Because looking at it, the US on its own won't allow prices of agro commodities to go above, or let's say most governments won't allow prices of agro commodities to go way beyond what it ought to go, so that their citizens can actually get these things at a cheaper rate. Don't forget, it's still you and I buying these commodities, and if it is at a very very expensive rate, it wouldn't be so good to the economy. Imagine going to buy something like cornflakes now, and they're telling you a pack of cornflakes is 20,000 naira. Of course, it wouldn't make sense, and you wouldn't want to buy. Right? So that's why there's most times a cap on this thing. So so the only time price might actually go above this cap is on maybe extremely bad events. Let's say, and like what happened with that time with Australia, it was an extremely bad event. So there was no way you could control the increase in price at that particular point in time. There was no way you could control the increase in price at that particular point in time. So it plays out like that in every chart. So support and resistance is 18, right? It's 18 on every chart. Right. So most likely this year, from all the information I've gathered on the news, most likely this year, because of the drought, that even the cotton market is also experiencing the same thing, right? So because of the drought we would be expecting this year, we most likely will be seeing a poor harvest, which would spike price up. Already when this news came out yesterday, most of this news came out yesterday. So I'd like that you just go and because of time, because we'll still need to dive into the 230 trades, right? So because of the drought we'll be having already. Okay, so look at this now. See, don't forget about the gray leaf spot, right? Gray leaf spot is caused as a result of bad weather conditions for the crops, and you get something like this, and of course that would affect the output, right? The output by the time it gets to harvest season. So most likely we'll be expecting that prices of agro commodities might rise, right? At the beginning of the year, there was a whole lot of speculations around having to, because there were new and there were improved seedlings. There was a whole lot of optimism around the agro commodity markets here. There was speculations that prices would actually drop a lot because there've been policies put in place. I think at some point the US government were also giving grants to farmers, right, to get new agricultural machines, agricultural machines, and also they were also sponsoring agricultural research on getting improved seedlings, right? So the outlook for agro commodities in general, especially with the eye opener from Russia, right? So Russia was one of the leading producers of the likes of corn, wheat, soya beans, and the like. So when the war started, of course, we couldn't get from them directly from Russia anymore. So prices of agro commodities actually spiked up. I think we should go to the chart so that we get a better view why I'm explaining most of these things. Let's go to the chart. So okay, so if you noticed, let's look at it on a daily time frame so we get a clearer view. Right. Okay. So we had this this thing with Russia Ukraine started early, I think early last year. So we had more of increase in prices. This is May 2022, right? We had data. It started roughly around that May where we started having this hike in price, right? So this is on a daily time frame. So it might look small. Then we had this hike in price, and then we had a little bit of stability. Then we started having a lot of ranging markets, right? The market ranged for several months. The market ranged several months, somewhat around here, ranged several months. And then we started having a stability on the agro commodity market. And then majorly this year, we've had a clear downtrend on most of the agro commodity, looking at soya beans also. Though for soya beans, I think, okay, so if you look at soya beans also, we've had price actually drop. Then we had this push up in price. And then for the better part of this is on a daily time frame. Yeah, we had this drop. Price dropped so much that it's gapped. Price dropped so much that it gapped at this point here. But on an overall view, we've had more of a downtrend on agro commodity, and it was expected that that downtrend should continue, right, until the reports of this drought came in, which started pushing agro commodities up. And you most likely will be seeing a further push up on agro commodities like it has started now. That news came out yesterday, and it has already started reacting to the market. So we had that news come out yesterday. So you have this push up on the market today. This was yesterday's candle, and this is today's candle. So you most likely will see price keep pushing up, right, until there is another this thing. So because the extent of the drought is still being analyzed, and of course you will still be getting further updates as to how it will be affecting the overall direction of the market, right? But I most likely will be seeing price of most of the agro commodity pushing up. Right? I most likely will be seeing price of most of the agro commodity pushing up because output is going to be poor for this quarter. Output is going to be poor for this quarter. So let's look at it technically though. Right, let's look at it technically. From you could take out time to look at farmprogress.com to see which of the some persons have a preference of which agro commodities they trade the most, right? Some persons have a preference for of which agro commodities that they trade the most. So you could just take out time to look at fundamentals on some of these things to determine which of them you want to be trading. But let's look at them technically to determine, at least in the coming weeks, what we are going to be expecting on agro commodity, right? So we'll be expecting, so all right, so let's go back to our chart. So if at all I'm going to be taking trades on agro commodity, right? Because we'll be looking at short-term trades, we'll be looking at long-term trades. So if you're looking at this, you see that price has actually been ranging around this point within this price level 500 on corn. Let's take corn. For the first instrument corn, you notice that price has been ranging around price level 508.68 and around price level 485.23, right? So my strategy on agro commodities is doing my analysis on a 1 hour time frame. Right, I don't really go to a higher time frame like 4 days, 1 day. You understand? Because already the price quoting on this particular instrument is massive. So going to a higher time frame might most likely your price, what will happen is most likely either your price doesn't trigger or it takes a long time for your price to trigger. So you'd most likely would be analysis you should do if you're trading on currencies. For example, you do your analysis on a 1 hour time frame and you get more of an instant move, right? So what I do is I drop my time frame to most likely a 15 minutes time frame, so I get more action, right? I get more volatility by dropping my time frame to a 15 minutes time frame, right? So worst case scenario is drop my time frame to a 15 minutes or a 5 minutes time frame. That way you get more volatility and you could see price actually ranging. And like I said, the effect of the CPI is also going to be felt on agro commodity. Effect of the CPI is also going to be felt on agro commodity. So you should expect that for today you should get the market range depending on when CPI comes out tomorrow. And the correlation of CPI to agro commodity, if CPI comes out and it is positive, it simply means the price of getting consumable goods, right, is low, right? So that should actually bring a push up in price of agro commodity, right? So if the price of getting agro commodity is okay, so I want you to understand this because it can be a little tricky, right? Even when I explain to people, sometimes they're like, I still don't get that. So just follow me. So if CPI is bad, or if CPI is good, let's start from there. If CPI is good, it simply means people can get things at a more affordable rate, right? People can get things at a more affordable rate. And because they can get things at a more affordable rate, right? A lot of persons would, if before right, I used to get cornflakes for 2,000 naira, but now I discover I can get my cornflakes for 1,000 naira, right? What will happen is I tend to buy more. I can buy 2 or 3 at once because I want to stock up. I can buy 2 or 3 at once, and then because I want to stock up, because I have money to buy more now that the prices are lesser. And then over time, what happens is the prices of that commodity begins to build up because it's now available at the price I can get it at an affordable rate. I get a lot, and then the prices begin to build up. So over time, once CPI is good, over time it pushes the prices of agro commodity up. And when prices of CPI, or when CPI data comes out and it is bad, over time it will push the price of agro commodities down because it makes it less desirable. Because once it is less desirable, if before I used to get my conflict for 2,000 naira, and now you're telling me to get that same conflict for 6,000 naira, it becomes less desirable. I now begin to reason my option. Do I really need it? Do I buying it now? Is it a necessity? Is it a need or a want? And then I can move on with, can I move on without it? If I can move on without it, I simply just let it go. And what happens is when there is no interaction with that particular commodity, it begins to drop. The prices begin to fall when there is no interaction with that commodity, because there is now a lot in the market. There is a lot in the market and nobody is buying it, and it is just there. Then sellers will be forced to bring down the price, right, to an affordable amount where people can now buy it, which will now bring the price. I don't know if you get me. If you don't get me, still let me get my session on the chart. Let me get, if you don't understand, let me get your queries on the chat, on the chat session. So I believe the way I've explained it, you understand. Am I missing anything? Okay, someone said it's clear, right? Someone is still saying you don't understand. Let me just give it a recap one more time. Well, one more time for Mr. Benjamin, right? So I'm saying if CPI is good, right? CPI is consumer price index. It simply means the cost of buying a particular consumable goods, which includes corn, wheat, sugar, and those are consumable goods. So CPI is the cost of buying these consumable goods. So if the data comes out and it is positive, it simply means the cost of buying consumable goods has dropped. That is why it is positive. The price of buying consumable goods has dropped. It is positive. So over time, because I feel now I can buy more goods with my money, right? Looking at corn now, I can buy more corn or more soya beans or more wheat with the money, with the little money I have. I tend to now buy a lot. Sometimes I might even buy on impulse. You get people buy on impulse because things are cheap. Before let's take for example, you go to the market and you want to buy cornflakes, and then before you were thinking conflicts was 1,000 naira, and on getting there, they're telling you conflicts is 500 naira. Naturally, people buy on impulse. I can say, why is it that cheap? I buy 5, right? So over time, I buy a lot, and a lot of people buy a lot of that particular commodity, making that commodity now scarce. By the time that commodity is now scarce, the price of that commodity now starts to push up gradually. You understand? The price of that commodity now starts to push up gradually. And then in a situation where CPI data comes out bad, it simply means before I used to buy my cornflakes for 1,000 naira, right? I used to buy soya beans for 1,000 naira, but CPI data came out. It simply means there is the price of buying consumable goods has now increased. It came out bad. If last year the price was at 0 point something and it has increased by 3%, the price of buying consumable goods has increased by 3%. Naturally, I now start to weigh my option. I now start thinking, just like on Saturday, a colleague was telling me she wanted to go and buy, she wanted to make chicken sauce, right? So on getting to the market, she was asking around, how much is bell pepper? Before I used to buy one bell pepper for 200 naira. Now I'm buying bell pepper for one bell pepper for 600 naira. And it's crazy because I was at the market already. I had my list. I go to the market with a list because of course most men will definitely forget. Send a man to the market, he will forget half of the things on the list if he doesn't go with that list. So I was there and I was looking at my list, and naturally I just brought out my pen and I started crossing off. Why will I go and buy bell pepper 1,600 now when I can just buy fresh tomato? So that's how it is. So you now start weighing your option. You start weighing your option. Okay, I don't really need this. I don't really, and it trickles down. So by the time you start weighing your option on some of these agro commodities, right, they now tend to remain in the markets. Once they remain in the market and there is no, and they are perishable goods, right? Of course, the seller would also want to sell them out so that he doesn't go at loss. So he will be forced to drop his price. Other sellers around would also be forced to drop their prices so that they can sell out those goods. So in the process of dropping their price, naturally price drops on the financial market. I believe it's clear now. That's as best as I can explain it, right? So that's how it plays out. So once CPI is good, you see price climb, and once CPI is bad, you see price actually drop. So that's just it. So most likely you'll be expecting a move on, you'll be expecting a clear move on most of the agro commodities by the time CPI will be coming out tomorrow, right? So if you're going to be entering a trade now on agro commodity, I most likely will be telling you to wait, because agro commodity wouldn't move as technical as other instruments would move, right? It's highly fundamental, especially as a result of it's highly fundamental based on what is happening around the agricultural market. Right, it's highly fundamental. So I'd want to advise that you look strictly into CPI tomorrow, and you most likely will be looking out for. I expect that. Personally, I expect that CPI should come out positive because the dollar has actually been weak for a while now. Right, the dollar has actually been weak for a while. Samuel, you have your hand raised. Please drop your message on the chat. Drop your questions on the chat. Right, if you have questions, please drop them on the chat, and we'll refer to them so that every other person can learn from that. So, I most likely will be expecting a positive CPI tomorrow because the dollar has been weak, and I think because of the weakness of the dollar for over a while now, right? Policies might actually be put in place to ensure that some of the consumable goods will be gotten at affordable rates. And of course, you've had inflation ravaging the US for a while now, and there've been continuous increase in interest rate. And I think Fetch Powell came out last week, was it last week here, to state that there will still be an extra 2%, an extra two increase, or how will I put it? There will still be further increase. That means 2 times increase of the interest rate again, just to curb inflation, right? And if they are doing that to ensure that inflation drops, right, that should also drop the price of consumable goods. All right, that should also drop the price of consumable goods. So I expect that that sentiment alone should at least give CPI a positive outlook for tomorrow. So I'm expecting also that agro commodity should also drop. Looking at it technically, price is heading towards a this is on a 5 minutes time frame. If you're looking at it on a 15 minutes time frame, same thing too. You see price range around this point, and if you notice, price has just bounced off a resistance point. Even if you're looking at it technically, indications on corn is a sell. Most of the agro commodity are most likely will be sticking out for a sell, right? So, but the good thing, the thing to now concern yourself about is where to enter that sell. That's the thing to now concern yourself about, where to enter that sell. So I most likely will be going in for a sell if price breaks below this point here. So you could see that price has been ranging around here. So the bust point to be below 502.92. So once price is able to break below that point, you could ride a free fall down to price level 496.44. So you could ride a free fall down to that point. Yeah, so that will be giving me roughly around, this should be giving me roughly around 65 pip. This should be giving me roughly around 65 pip. So if you're doing our mass, this is corn. If you're doing our mass, so 55 pip, if you're targeting 65 pip and you're going in at 0.01, 65 pip times 0.01. So 0.01 per pip movement will be giving you 2,000 naira per pip movement times 2,000 naira. So that should be roughly around 130,000 naira on just this trade. So if you're using 0.01, so you see, and of course, if you are if you're using a higher lot size, that should be giving you more. So let's take, for example, you're going in on a higher lot size. So you're going at 65 pip, you're targeting 65 pip times, if you're using a mini lot size, right, that should be giving you roughly around 20,000 naira per pip movement. So 20,000 naira, so that should be giving you 1.3 million naira on a mini lot size. And should you have the capital to go in on a standard lot, but to go in on this particular trade on a standard lot, you should have nothing less than 10 million naira in your account. No jokes, right? Nothing less than. So even with your 1 million naira going, except you won't be targeting as much as, but going in on a standard lot on a 1 million naira account on an instrument like corn would also be a high risk trade. I wouldn't lie to you. It would also be a high risk trade. So, like I said, use lot size that are proportional to your account. I won't overemphasize that because it's the basics of everything you're doing. Use lot size that are proportional to your account. So if you're going in on a standard lot, that is 65 pip times the standard lot. That will be giving you roughly around 200,000 naira per pip movement. I mean, an instrument that is giving you 200,000 naira per pip movement, you should know that if price goes against you 10 pip, right? 10 pip against you, you are out of the market with your 1 million naira. 10 pip against you, you are out. As in your account has blown off with 10 pip against you. So you should know that 1 million naira is still not enough to place a standard lot on an instrument like corn, right? So should you have enough in your trading account and you're able to go in on a standard lot, what you'll be getting is roughly around 13 million naira per pip movement. Yes, 13 million, like that's a whopping sum of 13 million naira per pip movement on a very short trade on just CPI alone. So you could see that the possibility is endless if you're very smart about it, right? The possibility is endless if you're very smart about it, right? So that's just it. So already from the analysis I've made now, you should know how much you'll be able to use on what lot size you'll be able to use in a 1 million naira account. From this analysis, going in on a standard lot won't work. You could opt in for a micro on a mini lot size around that side, and you'll still get the required results that you want. So if you're going in for soya beans, right? Soya beans is, if you're looking at the profit per pip. Let's look at profit per pip on soya beans. Let's go back to that slide. Where is that slide? Okay, so if you're looking at the profit per pip on soya beans, that's roughly about around 1,200 per pip movement on soybeans. That's 1,200 per pip movement. So let's go back to the chart. So if you're looking at soya bean, of course, I'm still expecting more of a downward trend on soya beans. On soya beans in expectation of the CPI for tomorrow, right? In expectation of the CPI for tomorrow. So if you look at it, price has been going in between here. I still believe that price might actually want to hit. Let's go on the 15 minutes time frame so that you get, okay. So you could see our price has actually gotten to a high point, and if you look at it at this point here, price has actually been struggling to go way above this resistance point here, right? Price has, so this resistance zone here, price has actually been struggling to go above it. And if you check your candlestick formation, right, if you check your candlestick formation, you see something like this. You have more of a reversal pattern at around here. You have more of a reversal pattern at around here. So I most likely will be seeing price fall all the way back to this support zone, or if not completely back to this support zone, it should at least get towards this point here. So you have another support here before the last one here. So if you're calculating from the current market price, even if you want to go in for an instant sell, but I wouldn't advise that. I wouldn't advise that. So I'd advise you going for a sell should price break below price level, because here also is a little, you could get a weak support at around this point here, right? So there's a weak support around this point at around price level 1357.53, right? 1347.53. So I think the reaction from CPI should push price way below this point, but my preference for soya beans is also a sell, right? My preference for soya beans is also a sell, but you could go in for an instant sell now, take your profit at around this point. That's roughly around how many pip? This is roughly around this is around 44 pip. So if you notice, the price quoting for soya beans is quite larger compared to that of corn, right? Compared to that of corn, the price quoting for soya beans is quite larger. So soya beans at a resistance point. This is looking at it on a 5 minutes time frame now. Price has been bouncing around the support for a while. You have your on a 5 minutes time frame, you could see your inverted hammer with your bearish confirmation candle, and price is slowly just gradually creeping down. So you could still key into this sell from here down to this point. That will still give you a good amount of, this is roughly around let's say 53 pip, right? This is roughly around 53 pip, but you should still be able to make more on it. Let's also look at the spread, because it's also very important to look at the spread of the instrument, so that you're not just placing that trade for placing sake. So if you say show okay, so you could see the white quotes here. So most likely what you want to do is going for a sell. You wouldn't want to go in for a tight space trade like that. So what the best thing would be to go in for your sell if price breaks below here, right? If price breaks below here, so at price level 1357.53, 1357.53 on a 30 or on a 15 minutes time frame, same thing, you still get the same thing. So if price breaks below this point, I go in for a sell down to price level 1318.31, 1318.31. So I just ride from here down to this point. I'm using MT5, so MT5 doesn't really give me the option to give I could use a box to color out my trading zone, but I don't think MT5 gives me that option, right? So from here down to this point would most likely be my sell entry, right? So as soon as price breaks in between these points, you go going for a sell. So that will be giving me an option of it should be giving me an option of roughly around 384 pip, right? 384 pip, right? Yeah, 384 pip. So if you're calculating that, going in on that trade with 0.01, that's 0.01, that's 1,200, right? 1,200 times 684. Let me calculate that again. 300 and okay, 384 pip. So 1,200 times 384 pip. So that's roughly around 400, and yeah, that's a long trade actually. That's roughly around 460,000 naira, right? If you're going in on a micro lot size 0.01. But of course, I wouldn't be targeting the whole of that pip, right? I wouldn't be targeting all. You could calculate, you could target 50 pip, right? You could target 50 pip. This is 300 pip. That's quite a lot, right? So the best thing would be to put your entry somewhere around there. Of course, the deal is if price goes below here, so I most likely will want to enter if price gets maybe on this entry point, and then take my profit before this point here. Like I said, it's still a very profitable instrument regardless of regardless of how many people you are getting from it. So this will be my entry. Make this green. So this to be my entry. I want to just target just a little and still follow the market. So if CPI still keeps pushing it down, then you might want to ride it all the way. Right. So of course, soya beans also, you're still going to look out for a sell. So if you're looking at the last agro commodity, we're looking at wheat, right? We are looking at wheat. So the same thing with wheat too is we're also expecting that this thing, we've been having a ranging market also on with price ranging in between this support zone and this resistance at around here. So you have price range around here. So price is at this resistance currently, and of course, technically you're expecting a sell. Fundamentally, you're expecting a sell. So I would even for wheat, I would even want to go in for an instant market execution, because you have this reversal candle. this retracement at somewhere around there. So here you could clearly see that price has established a triple top. So this here is rejection 1, rejection 2, rejection 3. So this is more of a triple top on this particular instrument on a 30 minutes time frame. So I could go in for an instant execution on a sell, going straight down to this support zone, right? Of course, price might not get there today, but of course, from the effect of CPI also might actually push price all the way down to this point, still giving me a good amount of pip, right? That's roughly around 127 pip, roughly around 127 pip. And also, you know how profitable wheat can be. So that's just my entry for wheat and wheat, corn, and soya beans for today. That's my preference for wheat, corn, and soya beans. So these entries, you could use them today. You could maybe use pending orders if you're using sell stops to get good entries so that you're not entering too early. You could use your sell stop to get your good entries. And of course, like I said, use lot size proportional to your account, right? Use lot size proportional to your account. So of course, you might decide to go in for your wheat. I was saying wheat, you could decide to go in for an instant execution or wait for price to break below this point, right? Wait for price to go totally below this point at price level 651.2. 651.62. You might want to wait for price to break below here, or going for an instant execution from the top down, because I still expect price to still keep falling from where it is at the moment. And if you see that price has repeated that thing, this is the third time price is repeating that. Price comes all the way up here, it falls all the way down here, and possibly you might also see a gap in tomorrow's markets if the CPI comes out in favor of the dollar. You might see a gap down, right? So you have this, and then price actually come down. It went up to that point again, it came down, and it's doing that, repeating that a third time. So we most likely will be getting the same effects, right? The same effect. So those are what we are going to be looking at. Those are what we should be expecting on agro commodity. So let's treat a few questions before we transition into the 2:30 trade for US sessions. Any question? Yes, any question? So someone is asking, is there any video that shows how to trade on this platform? Okay, so there are a lot of videos on our Rally Academy website. You could check out, and on our YouTube page, there are videos on how to trade there, especially if you're looking at technical analysis and how to trade on a lot of strategies, trading strategies. So you could also make out time to attend our physical classes on to get good trading strategies on how to trade the market, right? So if you're just starting this class, if you're just starting trading for the very first time, you most likely wouldn't understand most of some of these things that are being said here, right? So if you're a beginner, I'd advise you kick in from the beginner's level, right? So that you're able to grow your knowledge into what we have now, right? So of course, we all know the opening and closing time for agro commodities, right? We all know the opening and closing time for agro commodities, but if you don't, these are the opening time, because agro commodities, unlike other instrument closes, it has 2 opening and 2 closing time, right? It has 2 opening and 2 closing time. So this is the opening and closing time for agro commodities. So it opens by 2:05 a.m. and closes by 2:45 p.m. Then reopens again by 3:35 and then closes by 10 p.m. So it has 2 open time and 2 close time. So once it's around 2:45 to 2:35, you most likely wouldn't be able to place a trade on agro commodities anymore until the market reopens, right? Until the market reopens. So I don't think there's any other question. We want to okay. Okay, so yeah, a lot of persons have been asking, what about gap strategy? What about gap strategy? Of course, gap strategy is still a thing, but I think of recent, I've been following that strategy, and it's not been, that strategy used to work sometime early this year and late last year. We had that strategy actually boost a lot. So most times you have price, because agro commodity is very fundamental, right? Very fundamental. Unlike indices where you have a gap and then you see price try to cover up that gap, sometimes you might not really get that play out every time on agro commodity, right? Let's go back to the chart. So something like this, you had price, actually gap, you had price gap up, and then it came covered the gap. Of course, it's still a thing, right? It's still a thing. You had a gap down here, and price covered that gap. So most times when you get a gap like that, you expect that there should be what we call market correction. So let's just use the few we have 6 minutes until the US trading session opens up. So so for the gap strategy, the way it works is whenever you see a gap, there is most likely going to be a market correction, right? It doesn't happen every time. It's not it doesn't happen 100% of the time, but at least 90 to 85% of the time you should get the market try to cover up, because a gap is more like an abnormality in the market, an abnormal event in the market. So most times the chart tries to cover up that gap. So you get something like this. Here is a gap, then you see the market slowly try to cover up that gap. So in this case here, you could see that the market covered up the gap before coming back down, right? So unlike in this point here where you had this gap and it took a longer time, though the market came and covered it, but it took a longer time. So like I said, the strategy is not always 100%, but most times it's worth the trial. It's worth the trial. So if I told you you're going in for a gap, you should also ensure you put a stop loss. So if on this particular trade I'm going to trade this gap now, I would ensure that I put my stop loss below the previous low. So that's the mistake that some persons actually make. They just place their place trade based on the gap strategy and they don't put a stop loss. So if I'm going to go for this trade, looking at here where price actually gap down, I will have put my stop loss somewhere below the previous low. So if for any reason price doesn't cover up that gap, I'm being cut out at a minimal amount. Of course, using a reasonable lot size proportional to my trading account, I wouldn't be losing so much by the time I'll be cutting out my losses. You understand? So if at all you're going to be using gap strategy, always ensure you put your stop loss, because it might take a longer time than expected for that gap to cover up. So you could look at it going backward also. You had a gap here. So price actually gapped up. In this case now, price actually gapped up, and then instead of it took a while before you can see that it covered up that gap again. Let me draw this. So you could see that it covered up that gap again. So as soon as it covered up that gap, it started going back up. So I would have put a stop loss, right? I would have put a stop loss at above the previous high, right? At above the high, put a stop loss around this point here. So above that gap, I would just put a stop loss somewhere around there, and then I can keep my take profits open, expecting that price will come down to cover up that gap, right? Then I most likely will be targeting half of the gap as my take profit, or maybe to the tip of the gap as my take profits. So it's just a thing. You could go back to your chart, scroll to the past to verify, right? It's technical analysis, and it's most likely going to keep happening again and again. So looking at this point here, you had a gap down, right? You had a gap down here, price gap down here, and of course, because I've seen this gap down, I'm expecting price to cover up that gap. I'm putting my stop loss below the previous low. So should anything happen and price doesn't keep going in my buy direction, it should cut me at a minimal amount here. Cut me at a minimal amount. But you could see that this one, it's covered up this gap, right? It covered up at least 50% of the gap, came back down, and then finally covered it up. So you might not be patient because this thing took several hours. So sometimes you might not be patient for it to completely cover up the gap, but it's fine. If you have a good lot size, you will still be making quite a lot on this move here, right? You still will be making quite a lot on this move here. So in this scenario here, you could see that it gapped down to this point, right? And then started pushing up. It gapped down to this point and then started pushing up. In this scenario, most likely you would have actually cut out your losses, because look at what happened here, right? So for someone like me, because you'll be setting your stop loss below the previous support, So in such scenario, most likely price will have hit my stop loss and would have taken me out of the market. But I still would be able to have enough to still place other trades, right? Cutting that trade at a minimal amount rather than still hold on to it for it to keep dragging. Right. So as a trader, you also need to know when to cut your loss early enough and then move on. So you could check the charts and verify. It's a very, very good strategy that has been working over time and will still continue to give good results, right? So that being said, let's just look at it. To be it's almost 2:30. Let's look into the US market so that we can trade the opening of the US session and at least take some live trades. So please don't go anywhere. Let me catch my breath and we'll just transition into the US market. Okay, so the US 2:30 trading session is it's a thing that we started doing just not really of recent, since the beginning of the year. So the whole idea is trading the opening of the US session, right? I believe a lot of us have actually been joining the US trading session, and it's live trading sessions where we take live trades based on the opening of the US session, right? So let's quickly look at the dollar index, right? Let's look at the dollar index. Looking at the dollar index, like I was saying, right there in the agro commodity class, we've had more of a poor performance on the dollar for a long time, right? It's been roughly around 3 days or 4 days straight. Looking at it, we've had from July 5th to up until July 10th. We've had very poor performance on the dollar, but if you see it now, I think sentiment around the CPI has started giving the dollar a boost. Sentiment around the CPI has started giving the dollar a boost. And then looking at the candlestick formation here, you have more of your, look at this perfect doji here. Look at, this is a perfect butterfly. This is a perfect butterfly doji, a perfect butterfly doji with our bullish confirmation candle, a perfect butterfly doji with a bullish confirmation candle on a support zone, right, on a support zone. If you don't understand what I'm saying, I'm talking about candlestick formation. So if you've not been attending advanced classes, then you have yourself to blame, right? You have yourself to blame if you've not been attending advanced classes. So this candlestick is what we call a butterfly doji, then with your bullish confirmation candle. So that indicates more of a bullish reversal for price, a bullish reversal for price, a bullish reversal for price. So I'm expecting such a movement like this. Price has hit a support zone. I expect that price should actually push up. So this is on dollar index, and of course, once dollar index starts pushing up, the dollar index is the dollar against a basket of other major currency, right? The dollar against a basket of other major currency. So since we are getting this on the chart, we most likely will see price break above this support, this resistance point, pushing upward, right? But what I'll be looking out for is more of an instant. I'm looking for more of a buy opportunity for those that trade dollar index. I'm looking for more of a buy opportunity on this particular instrument, more of a buy opportunity on this particular instrument. And on Forex Factory today, we don't really have any major news, right? Everybody is waiting for CPI. Investors are really, really quiet. Let's go to forexfactory.com. Investors are really quiet. So you could see investors are really quiet, and all the news for today are already out. So investors are really quiet, waiting for a whole lot of volatility that will be coming out tomorrow. So it will be starting from NZD. We have the likes of AUD, where we'll be having their governor Low is speaking. We have GBP, where Billy will be speaking. Then 130, which is the Ogbonge of them all. We have CPI. We have CPI. We have CPI. We have a core CPI. Those two, three. It comes in three categories. So those three will be coming out by 1:30 tomorrow, and of course, it's mostly going to send positive sentiment around the dollar tomorrow. So anything you're doing around this point should be looking out for more of a buy outlook for the dollar, right? More of a buy outlook for the dollar. So for today, despite the fact that price is actually selling, right? That's why the fact that let's go to a 15 minutes time frame though. Same thing. So price has come, tested my trend line here. So let's go to a 5 minute also. Same thing. Price come, tested this my trend line. I expect that price should bounce off this point, and that my trend line is also very close to a. So let's go back to my MT4. So price is actually at a trend line here. Price is actually at a trend line here, right? So this is looking at it here. Price bounced off this resistance point, and there is a support zone here, right? So I expect that looking at it, the 230 trading, this 230 this thing has started. I expect that price should actually bounce off from this point. So I most likely will be using a sell limit at around this point here. So I'm coming here, I'm placing my sell limit trading. I'm putting sell buy limit rather. Sorry, buy limit rather. So below my current market price. So I'm putting a buy limit, expecting that this sell should be limited. And then as soon as price gets here, it triggers my buy and starts going up, because I'm rooting in for a buy on dollar index. It's of course, it's the opening of the US session. So that should give the that should give the dollar a boost. So you could buy from here. You could do an instant buy, expecting that this point will be strong enough to push price back up. I could also, I use a buy limit, and I could also use an instant buy. Where is my, okay, yes. I love using this when you could use alternate T to bring out your buy terminal. So I could also use an instant buy. This is on a 15 minutes time frame, on a 5 minutes time frame. So you should expect that you get, and also, of course, whenever there is volatility like that, especially for those that use standard account, you should expect floating spread. So you're going for your buy, and then of course the resistance at the top here can serve as your take profit at price level 101.634, right? 101.634. So two options: either you're going in for a buy limit at price level 101.475, right? Either you're going in for a sell limit, a buy limit rather. I don't know why I keep saying sell limit. A buy limit at 101.475. Take your profit at 101.634. You could do a buy limit at with that entry, or do an instant buy and then use your resistance points, a price below your resistance point as your take profit. So that's for you, the dollar index. So if you're looking at Euro USD, if you're looking at Euro USD also, I think the buy has also started to take effect, right? Euro USD also, if you see this candlestick, once this candle closes, of course, that should be more of a buy retracement on Euro USD. That should be more of a buy retracement on Euro USD. So looking at it technically, this point, which used to be a resistance, is now serving as a support for price. So this is a turncoat resistance, which is now a support for price. A turncoat resistance, which is now a support for price. So I'm expecting that price should actually be rejected from this point, pushing up. Rejection has already started. Once this candle is able to close bullish, you should continue to get that bullish run up until this resistance point here. You should be able to get that bullish run up until this resistance point here. So I'm going in for, also my preference on this instrument is a buy also, right? A buy. I'm going in for a buy at around, you could do an instant execution. What I'm seeing here is an instant execution also, right? So an instant buy at this point. I'm dragging my take profit before my resistance at the top here. Before my resistance at the top here. Instant buy on this particular instrument. So of course, I want to put my stop loss just somewhat below here. I want to use a tight stop loss somewhere below here, targeting how many people. So I'm willing to risk. This is Euro USD. Of course, it's not so profitable. So I'm willing to risk just 13 pip in order to gain roughly around 36 pip. I think that's a fair trade, right? That's a fair trade. So I'm going in for an instant buy on Euro USD. You could do that with me. Ensure you put your stop loss and your take profit, right? Ensure you put your stop loss and your take profits, right? So let's look at another USD pair. I'm also looking at USD JPY. Already USD JPY. Okay, are we late to the party? No, we aren't. So this also, if you're looking at it, candlestick formation here, we have you have a hammer on a support zone, right? You also have your you also have your butterfly doji with your bullish confirmation candle. The next candle is very, very bullish. So I'm also chipping in for a buy. Though the JPY has actually been strong for a while, but of course, we've already entered into the US trading session, right? So definitely you should see the dollar actually gain a whole lot of strength in its session. So I'm actually going to be going in for a buy up to this resistance point. There are two notable resistance before this one here where I have this line here. So if you notice, there's a resistance at around here where price is almost at, right? Because we didn't key into this trade quite early enough, right? So there's a resistance point at around here, and then there's another one somewhere around here. So what I'll be doing is, I wouldn't want to go in for an instant execution on USD JPY, right? I wouldn't want to go in for an instant execution. I most likely will go in for a buy if price breaks above this point here, right? If price breaks above here, right? So I most likely will be going for a buy. Or let's go to a 15 minutes time frame. Let's see if there is opportunity for us to. Oh, still same thing. So you could see that price has actually approached. If you had been on this chart earlier, we would have keyed into an instant buy up onto this resistance, but price is already approaching that resistance point. So I don't think it would be a smart thing to enter an instant buy. So, but I want to go in for a buy if price goes above 140.861. If price goes above 140.861, I'm going for an instant buy up until this resistance point at 141.395. Right, so that's going to be more of a buy stop, right? Not an instant execution, more of a buy stop, right? So that's my entry for USD JPY. So let's look at another USD pair. Same thing on USD CHF. I think for USD CHF, we are still early and we could still key into this move, right? So the next resistance, or it's just a very little resistance, and most likely we should still have. Okay, let's also apply our axe line to see spread. Okay, perfect. So you still have good, though the peep from the current market price down to where you have your take profit. That's roughly around 19 pip. So you could salvage 19 pip if you're going in for an instant buy now, right, on USD CHF, So you could go in for an instant buy. You'll be able to make 19 pip. You'll be able to make 19 pip, right? If you're going in for an instant buy now, right? If you're going in for an instant buy now, right? So that's just for USD CHF, So you could do that, and of course, if price breaks above this point, you could still continue riding that buy next to the up to the next notable resistance at around here. So my buy is an instant buy, taking your profit, your first take profit at around 0.88489, right? And then if price is able to break above that point, you could key into another buy up until 0.88802, right? 88802 up until that point. So that's just for USD CHF. That's all. Of course, you should put your stop loss below the previous low, which is somewhere around here. Just target 10 pip below the previous low, and then tag your stop loss at around that point here. Let me give that somewhat of a pink here. So you tag your take profit 10 pips, somewhat around 10 pips are below. This is 6 pip, but you could still bring it down. Let's say make it 10 pip. Right. So this is currency pair. Of course, you should use good lot size in order for you to make good profits from the market. So let's look at USD CAD also. So for USD CAD, I think CAD on its own has a little bit of has been gaining a little bit of strength though. So for USD CAD, you could see that the market is been range. It's more of a ranging market. Currently, price has actually hit a resistance point on USD CAD. Right, price has actually hit a resistance point for USD CAD. So I wouldn't be hasty to go in favor of the dollar at the moment, right? For USD CAD, I wouldn't be hasty to go in favor of the dollar at the moment. So that now brings my curiosity to how strong is the CAD for me to now determine if we're going to be taking trade on USD CAD. So let's quickly clear our curiosity to see how strong the CAD is. So we're going to be using currency strength meter. So we want to see the daily production. Yes. So you could see that the CAD is actually very strong. It's the second strongest instrument on the charts. Daily time frame. Where is it? Overview. So okay. All right. So okay, I just saw CAD up here now. It has dropped. We have currency strength meter daily on a daily time frame. We have CAD, JPY. Then USD is slowly picking strength. We just entered into the USD, into the US session. So I expect that this should still gain more strength, pushing the dollar up, especially because of the fundamental coming out tomorrow. So despite the fact that the dollar is somewhere around here now, you most likely will be seeing the dollar push up in a few minutes, or let's say in an hour time or 2 hours time. So if you're checking the chart again, at least the dollar should have gained more strength. But CAD is also not so strong, though it's among the strong currency, but it's also not so strong. So I still will be going in for a buy. Since we are not expecting any fundamental again on the CAD, I still will be going in for a buy, right? I still will be going in for a buy on USD CAD also. I'll be going in for a buy on USD CAD. Tomorrow also, we are not expecting, okay, tomorrow we're expecting, okay, that will be by 3 p.m. Well, we're expecting quite a number of news on the CAD, in addition to the news we're expecting on the dollar. So that's also a tricky thing, because I'm very, very selective of the instrument I place trades on. I want to ensure that if I'm going to be placing a trade on a particular instrument, one pair should be expecting high impact news and the other pair should be quiet, right? So it's more like pairing a talkative partner with a quiet partner. Most likely you will get a suitable match. So that's what I'm trying to do. So in a scenario where I'm expecting fundamental on CAD tomorrow, of course, there should still be positive sentiment on the CAD. So I'd want to stay away from an instrument like USD CAD, right? I want to stay away from an instrument like USD CAD. So I most likely wouldn't be taking a trade. And that's why you're having something like this, despite the fact that we are in the US session, the US is pushing up and CAD is also pushing down. So you most likely wouldn't be getting a clear-cutted direction in USD CAD. So we move, right? Let's look at gold. Let's look at gold. So for gold is giving us every indication for us to sell at this particular point in time, right? Gold is giving us every indication for us to sell at this particular point in time. So I most likely would also be pitching my tent for a sell on gold. Of course, you all know about the inverse correlation of the gold and the dollar, right? We know about the correlation of the gold and the dollar. So if you're checking it here, you have this you have this rejection at the top here at here where price has been rejected 1 2, and it's now currently serving it used to be a support, now serving as a resistance for price. And then you have this your bearish confirmation candle confirming this sell run. So you could go in for an instant sell on gold also, right? I still will pitch in for an instant sell on gold, right? So I'm going for an instant sell on gold, dragging my take profit down to before the next resistance point, right? Before the next resistance point. So this is the next resistance point at around 1910.23. 1910.23. So I'm going in for a sell up until this point. Of course, putting my stop loss few pips above my previous high. So this would be my stop loss, few pips above my previous high. So let's leave my stop loss as red. So I went in for an instant sell, putting my take profit around anywhere before this support zone here. This is my support zone in magenta color, right? So anywhere around that point will be a good point for my take profit. But of course, your stop loss can be 10 pip or few pips above your previous high, and that's for gold. I hope you're all taking the entries. I hope you're all keen to the entries, right? I hope you're all keen into the entries, right? So that's just for gold. So let's quickly look at US 100. Let's look at US 100 also. Wow, I wish we had been on US 100 charts a few minutes earlier, but it's still not late. You could still also key into this long sell on US 100. If you could also still key into, because it has not rested well on the support. It's heading towards this support and it has not rested well on that support. So though it's still a slim, we will have made quite a lot if we had been on that chart earlier on. Right, we'll have made quite a lot if we had been on that chart earlier on, but I still would want to pitch in a quick sell on US 100. I think this is already in profit, but I would want to leave it to, of course, you don't have to wait for price to get to your take profit point, right? So if depends on what you are looking out for, you don't have to wait for price to hit your take profit point. You don't have to wait for price to hit your take profit point, but you could just quickly key into that sell. And if you're a scalper, you could do multiple sell, right? You could go down to a 5 minutes or a 15 minutes time frame and do multiple sell, right? So I'd want to key into this advantage. That's 4 trades all at once. Okay, I'm using MT5, so I'm going in at, yes, I just stacked that trade, right? I just stacked that trade. So I'd want to go in for an instant sell for US 100. So, and that's going this about 3,000. Should I close it? No. Let's just run and hit my take profit. If you've not taken this trade, I don't know what else again I can do for you, right? This is 6,000, and of course that's 7,000 in the bag. I didn't have to wait for take profit, right? And I'm out. So let's look at US 2,000 also, right? You could still keep scalping on that sell, right? If you're a scalper, you could still keep scalping on that sell. I see that my attendance is reducing. Have you guys left me and ran to your MT4? Please, there are still some opportunities. You could use your phone to join in, but if you don't have 2 devices, then it's just unfortunate, right? But for those that have 2 devices, use one device to join in on the Zoom while you're using the other device to take your trades, right? You benefit more that way. So for US 2000 also, I'd also would want to go in for a sell, right? US 2000 is a very, very profitable instrument. I think it's the most profitable indices that's going at par with some of the agro commodities. Like I think US 2000 should give you roughly around 1,300 or 1,400 now per pip. I can't really recall, right? But like I said, this also, looking at it, it technically is giving you an indication for a sell. Price has been rejected at this resistance, 1, 2, 3, and this is the fourth resistance. So I'm expecting still a sell. I'm going in for an instant sell down to this point. And of course, if you're a scalper, you could do that quite a number of time, dragging your take profit right down, right? So I'm going in for an instant sell. Take profit to be at around 1960.1, 1960.1, right? So that would be my entry for US 2000. Instant sell, instant sell, instant sell. I think that will be all for the US trading session. If you're able to take advantage of those trades, good one to you, good one to you. Because and for those that are scalping, right, you have more opportunities because you could go in, you could take multiple trades and double the effect of that trade on your trading capital. You could just but in as much as you're trying to stack your trade, also ensure that you have your benchmark. You have your benchmark. Don't forget that if you are taking zero, let's say you're taking 0.50, if you're taking that 2 times, that equals a standard lot, right? So you should also should put that calculation in head in as much as you're stacking. If you're taking 10 0.01, that equals to 0.1 trade. So most times when you're stacking, it's best you do maybe let's say worst case scenario 5 at a time. You do 5 at a time, you close out first before reopening a new set, right? 5 at a time, you close out first before reopening a new set, and that way you'll be able to make more profits, right, from the market rather than hopping your risks by entering, let's say 10, 15, 20 trade all at once, and you get confused by the time the market starts going against you, right? So that's just it. So every other, if you have any other questions, right, you could relay them directly to your account manager, and I wish you all a good trading a good trading session, and always ensure that you try as much as possible to improve yourself. All this is not just for you to just come and take trades and go. Try and improve yourself. Try and get the knowledge as to how trading works, right? So that you could fully understand how this market works and make profit. It's when you understand how the market works, that's when you can actually make good profits from the market, right? So that being said, ensure that if your account is not funded, please fund your account for CPI tomorrow. I can assure you that CPI is going to be massive. A lot of people made money from FOMC last week, but I can tell you that CPI will be bigger than FOMC that came out last week. So please ensure that you have your account funded, right? Please ensure you have your account funded so that you can key into CPI and PPI. That is on Wednesday, which is tomorrow, and on Thursday, right? CPI and PPI is going to be a massive one, and it will be a shame if you miss out of it. It will be a total shame if you miss out of it. So do have a wonderful day, and God bless you all. Okay, someone is asking for the timetable for the physical class. The physical class, we have our physical class on Monday and Tuesdays, and then it goes again on Wednesday and Thursday. Monday and Tuesday, Wednesday and Thursday. Right? Monday, Tuesday, Wednesday, Thursday. So if you're attending on Monday, it finishes on Tuesday. If you're attending on Wednesday, it finishes on Thursday by 10 a.m. The class is by 10 a.m. Right? So if you're coming for the class, come fully prepared because you most likely will be spending the whole day at the class. But you could decide to break the class into sessions for those my busy people, right? You could decide to break the class into sessions, right? You could attend in the morning, then when they're going for break, you go, then come back again and attend another day. Right. And the class is continuous. It's a continuous class. The learning process is continuous. So of course, knowledge when it comes to rally is infinite. We keep learning new strategies and we keep dishing out these new strategies. So for those that have gone past beginners level, ensure you attend advanced classes also, right? Advanced classes will help boost your trading morale. It also help boost your trading to a large extent. All right. And for our VIP clients also, you also have your own special sessions for one-on-one training and all of that. So if you're interested in one-on-one training, ensure that you try as much as possible to push up to the VIP level, and then you reach out to your account manager to arrange a one-on-one sessions for you, right? Yes. So we also have our online trainings, right? We have our online trainings in the morning, right? We have the morning market review where we look at trades for the day, and then with that you could decide what trades to take. And then we have evening trainings in the evening around 6 to 7:30 p.m., right? Then online we also have online morning trainings around 10 a.m., right? So there's a whole lot of varieties for the training, right? So just try as much as possible to key into those training whenever it clashes with your free time, and I can assure you that there's something new you're going to learn. Times for advanced classes are always passed across before the due date. So sometimes you get a call, sometimes you get WhatsApp updates regarding those advanced classes, and then they are being sent to your mail, right? So ensure you keep up to date with what's happening in rally trade, and you'd be able to key into most of these trainings. So do have a wonderful day, everybody.